No one have heard it. That's interesting. Okay, that's a little bit not talked. You know, when it comes to a trading side of things, no one talks much about this. But I've been studying so much things about quantitative trading, real quantitative trading. Okay, no quantitative trading is basically a type of strategy that you use that relies on mathematics and algorithms, but people always confuse as expert advisors. Okay, so expert advisors, what do expert advisors do? So they are a set of parameters. Okay, so that's pretty much, let me change the color. They are a set of they are a set of parameters. So parameters, and then they have a code that is 0 and 1. So 0 will mean, let's say, short, and 1 will mean, let's say, long. And then they have this code and they put on an EA, and then the EA is an expert out how to call expert advisors, sorry, expert advisors. So they will pretty much trade the market on behalf of you when the code have the parameters set by you. Okay, so that's pretty much it, what they do. Quantitative trading is a little bit different, because quantitative trading, you use physics, you can use science, you can use chemistry, you can use all sort of mathematics that you can possibly imagine. Let me see if I have a book here on my drive. Let me just see my drive here and see if I can quickly show you guys some of the mathematics behind it. Oh yeah, sorry, it's on my other account. I have it on my other account. Let me grab it here really quick. This one, Google Drive. There we go. And then this one, maybe this one. No. Oh, I don't have it. I thought I had it. Oh, that's a shame on me. It's supposed to be here. Maybe I have it here. Oh yeah, there we go. Okay. Let me open this one, maybe this one. This one is good. So if we look, this is the kind of things, that I was studying. Let me download this content so I can open here. Okay. This is the sort of thing I was looking at, and Hurst exponent and financial market predictability. It's a very nice content, all right, but it's not easy at all right. It's really not easy, like when you use the mean value, when you adjusted series, or let's say ranges series, or blah blah blah. The Hurst coefficient, it basically shows us, and then this is the Hurst exponent, and this is where I got the strategy. All right, I was looking at it and I was like, oh, okay, I can build a strategy on top of these, and this is the Gaussian distribution. So let me see if I have my Excel here and I can show it to you all. Where is my Excel here? I think it's this one. Oh no, not this one. This one is from last. Let me search it here, guys. Just a second. again. File. And then, no, that's the report. Oh, no. This one? Yeah, this one. Found it. Okay, there we go. Okay. So if you look here, it's a very simple strategy, right? A very, very simple strategy. There's nothing crazy on it. But where is my pen? Where's my pen? Here. Okay, so if we look at it, we pretty much have the long side, the short side, and the neutral side, and that will be from the long side. Sorry, yeah, long side, short side, and neutral side. And when we have like values that are between 4.5% to 0.3%, that it's on this side here, we short it. And then when we have values from 0.3 to 5.1%, we long it. And then on top of here, on the middle of 6.9 to 6.6, we don't do anything. All right, so how do I calculate this? Is pretty much if we go to the chart, let me open the MetaTrader. ACY. Okay. Okay. Let me just put on the other screen. So which screen you guys see? This one. Okay. So if we look at here, right, if we go for the daily one. Okay, so if we go daily, so what I was pretty much doing, the strategy was predicting the next day candle. So trading on a daily, on a daily time frame, I was like, okay, so this candle was negative. Okay, the volatility of the last candle was negative. Therefore, I will be shorting the next day. Okay, so next day probability again is to be negative. I will be shorted, and then I had a loss. And then, okay, next day would be long, and the next day would be long, and then I got it wrong, and then I got short, I got wrong again, and then next day long, and then it pretty much was doing this, okay? And since 1980, I got the data all the way back from 1980, and you won't believe it, that's very profitable. All right, it's a very profitable. Of course, it's not simple as that. You know, you need to have lots and lots of things added to these. You need to have the Hurst coefficient is one of those. You need to understand the logic behind it. But there's definitely lots of things, you know, happening around the other scope of the market, that is the AI. All right, the machine learning. Like there's another book I was reading that was, let me check it here. I think it was, what's this one? Oh, not this one. JP Morgan, Hurst exponent, conclamove growth. Yeah, maybe. Yeah, I think was this one. Yeah. So this one is like a neural network. So where is, well, I've made a download. Where's the download now? Oh, there you go. It's downloading it. Okay. So if we look for this one, right? We're looking into into KAN and MLP, so multi-layer perception in a Kolmogorov-Arnold network. So they are pretty much similar. But what it changed is on the W2, the non-linear fixed, and here it's so they have a non-linear fixed on top of it on the first one, and then they have a linear lienable on the last value. Okay, that then gets to the decision. From here, the decision occurs a little bit differently. So they have three phases. So they have the first phase. That's the learnable activation function on edges. And then they have the sum operation modes. And then they go to the non-linear learnable. And then they go to the decision already. Okay. So they pretty much very similar, but a little bit different, if you can understand me. So these types of content, I started to look at it. I was like, oh my God, that's nice. I liked it. So that's, and then, okay, so there's another thing that they put it together, both of them. And then they had the whole model graph, and then they have our node, and then they have the network equals to Can. And then Can was the whole thing behind it, right? Because they're like, okay, so what about if we put both together? Then we have like a super thing. And they were right. So there's machine learning as well. There's all sort of kind of things that it's very nice to learn, but we're not here for that today. I just gave you a briefly introduction on quantitative trading. The reason being is the next couple of days, maybe the next day or so, it just depends on how quick we can edit the video. We're going to be having the how to trade. What does trading with AI mean? Okay. It is, Steve. It is a fascinating subject, mate. I can guarantee to you that if you are someone that do like to study and you do like to perceive new goals, or even, how can I say that, even understanding a little bit more on the other sides of things, you will like it. You will definitely like it. It's nothing that it's on YouTube or like that, those things. You need to read actual papers from like old papers, translated to today's language, let's say. So it is a very nice thing. Yeah. Does anyone here trade with AIs or something? No. Because what I found as well was, if we go to MKL5, okay, no one, okay. So if we go to MKL1, right, MKL5, okay, we have all those sort of kind of EAs here, right? We have like the gold Ripper MT5. We have the Hercules AI, Quantum Emperor, Quantum Queen, FT Gold Robot. Like, we have all of those EAs. And then let's say let's go for whatever. Let's go for this one. Okay. Look at this. This is perfect, isn't it? Extreme risk level, 154 percent since 2015. 96% win rate. Okay, that's really good. Now, I ask you, would you believe on it? Because, if someone look at it, 154 million, sorry, $154 million since 2015. But anyway, so he deposited, how much he deposited? I can't even see it. $154 million. Initial deposit was 10 million, and he made $144 million in 2015, 16, 17, 18, 19, pretty much 10 years. Okay, 9 years. So he made 140 millions in 10 years. Wow, that's a pretty good thing. This guy should be working for JP Morgan or something like that, right? Because JP Morgan can't do these sort of returns. Why? How can you do this? Or even Goldman Sachs, Citadel. Like, look at trading floor, Citadel. Look at how big the trading floor, Citadel. Look at how big the trading floor on Citadel is. All right. These are all PhD people, and you know, this is New York Stock Exchange, but this is on Citadel as well. They're all master's degree in like, and then you like, people think that they can buy a Quantum Emperor MT5. I'm not talking bad about these. It can actually work or not, but I don't care. But it's just the thing that how these sort of equity curves happen. This is called overfitting. Okay, it's called overfitting. Let me see if I have an AI here so I can show to you guys. Very, very quick. Single. I don't have an AI, unfortunately. Yeah, I don't have anything. But anyway, so how can you achieve those sort of returns and take a screenshot and put in here? Because that's easy. Like all the ones, like, okay, stop for a minute and think with me. This guy here, it's making 154 million. Randomly picking another one. I don't know which one I've picked it, but anyways, picked it, this one. All right, let's see the equity curve. Okay, this one, equity curve. Look at Euro dollar equity curve, Aussie dollar, GBP USD, like all the good equity curve and everything. Okay, another one. Look at this equity curve. This is like, whoa, this is perfect, right? It's so good, scalping trading. Look at another one. Let's this one we already have a look at. Look this one. Let's see the equity curve here again. What's this one? Well, he doesn't even show the equity curve. Okay. Anyways, so we had 1, 2, 3, 4. We had 4 EAs looking at it. All right. We had a look at 4 EAs. All of them made millions. So why are all of those people like, how can they show you something and then you're gonna buy, you're gonna spend $1.2 thousand, $1,300 on something, and then this is not what you're gonna get, because this is called overfitting. So what overfitting does is, let me grab my pen again. Okay, so what overfitting do is pretty much over. Okay, we have parameters. Okay, on an EA. So parameters are inputs. Okay. And inputs are values. And values are equal numbers. Or words. So overfitting comes from, what's the name of it? I remember in Portuguese, I can't remember. Optimisation. So, okay. So the guy goes, create an AI, EA, creates an EA, and he runs on euro dollar only, or whatever, pound dollar or anything. All right. He runs on an asset, and asset class. Once he has the strategy can perform well in under certain conditions. In some other conditions, the strategy may not perform very, very well. So with that in mind, what does he do? He goes and optimize it. There's nothing wrong with optimizing an EA. All right. This is actually what you should do when you build your EA, when, like, let me see if I have a code from my EA here. Visual code. This one. Let me open here very quick for you guys to see. Okay, so this is what I'm doing at this moment. All right, I'm pretty much how can I? Okay, I can't because I've put all the letters on top of it, so that's not good. Let me share the other screen. This one. Okay, so you guys can see on here. So yeah, I want to install it. Okay. Sorry. So, okay. So if we look at here, right? Oh, I can't show you this. This is my little sauce. So pretty much what I'm doing at this moment, I'm optimizing the strategy, right? See that it's not good. Can you see that this is not good? Like all of the things have been not good. Then it becomes a little bit better, and then a bit better, and then a little bit better, a bit better, and then you're optimizing. You're trying to find the best value for the, see, now it's much better. Like we started on this. Sorry. We started on this, like all the years on red, but the strategy, I knew it was working because my regular and outliers was predicting a monthly return between 0 to exceptionally 0.3, but then I worked again, and then 0.1, and it's a little bit better, and then working more and more and more. And then when I could get something like this, okay, and then from this, keep working and get this, and then keep working, get this. Sometimes it can get worse, but in this case, it was getting better and better, okay? So again, work, get something else, work, get something else. So that's pretty much what I want to show to you all. Let me share my screen again. Okay, so the guy, when the guy optimized it, right? So he's optimizing it. He is overfitting. Okay, overfitting, it's very easy to do. All right, you just take the parameters and you put like parameters, and you take these two things and you put like, okay, so my value input will be equals to 10, whatever, just random numbers. My moving average will be equals to 5, and then you're gonna try to test it out to see what will work best for your strategy. But the big catch is here. The big catch is here, okay? If we look at this, he is from 2015, right at the bottom here, all the way to 2023, okay? So since 2015. Now, if he takes the same inputs, exactly same inputs, and puts lower, all right, before 2015, it will fail. Okay. Does anyone know why? Can you like, when it comes to trading, guys, we need to use our brain. Okay, we need to think. We need to try to understand the situation like a concept. Why do you think that if you use the same parameters before 2015, the strategy will fail? Does anyone have a clue? Give you a minute. You guys can think about it. No? No idea? Okay. All right. The reason being is before 2015, there is a change in parameters. Exactly. Perfect. Before 2015, the parameters were completely different. So that means that he overfitted the expected divisor or whatever for 2015 on to 2023. Even if he runs in 2024, it may be differently from 2023. All right, 2023, sorry. So overfitting is overstretching, like optimizing the maximum of it. So then you can show someone that it works. And I remember when I started to use like automated strategies, um, um, when I was starting to I was just remembering myself here, because when I started to go for like quantitative trading, I was, overfitting my strategy. I was like, oh, that's working fantastically now. Like all the parameters are optimized in the maximum. But this is not good. You can think that it's okay, that must be like fantastically good, but in a sense it's not, simply because when we are optimizing, we are overfitting. So the parameters will get too overfitted, and then the inputs and the values will only work for the amount of time. So from the initial date, all right, to the end that you train it. All right, you train it, the EA, to work on that period of time. But if you take the same inputs on B to C, you will see a decline on value, because it wasn't fitted for this period, but it was fitted for this period. Okay, so this is pretty much why these sort of results are very easy to get. And this is called the Monte Carlo simulation. Very easy to get done as well in a wrong way. And this is the best line, that the best equity curve that they got on Monte Carlo. We can see here is exactly the same line. See, even the drops there. So yeah, guys, look, my opinion when it comes to quantitative trading, I was exploring a bit. I was talking, to lots and lots of friends that are in this industry, and they're like, yeah, man, it's same as normal trading. There are people very good, there are people very bad, and there are people just selling courses to get money from it. But I thought bring a little bit of a new content and see what you guys think about it, because I've never brought this sort of content. And I was talking to one of the guys in ACY, and then he was like, yeah, look, it is a good topic to talk. Why don't you go and talk about it? It's like, I don't know if they will like it. I don't know if there's something, because it can be very boring. I don't know. And they're like, okay, I'll give it a try. So I want to know from you guys, what you guys thought about it. And Steve, that's exactly my video I've done today. Is AI the future of Forex trading? That's exactly the title of the video that you guys will get probably like tomorrow or so, or even today. Let me check. Let me check with my team here. Just a minute. Yeah, nah. Tomorrow only. Today, we had another video about euro dollar. But tomorrow you guys will be able to look at it and with a little bit more emphasis on that. But anyways, so any feedbacks on that, please put down in the chat and I will have a read on that later on. It isn't boring for me. I mean, I've never heard about all you mentioned except for AI trading, and these have added more knowledge. That's really good, Sweetie. I feel very happy then, you know, to add you some more knowledge on that. That's very helpful as well. How can we compete with this technology? Okay, I'm gonna tell you something. We do not compete. We play with the technology. So that's my personal thinking of it. You know, like when we have this sort of technology coming to the market, look, don't get me wrong, like quantitative trading have been around for years and years and years and years, but it has only been talked a few months ago. So I mean, a few years ago, back 2 years, 3 years ago, quantitative trading become a little bit more bigger. So we just need to understand it and go with it. We can't fight against it. Okay, so that's my opinion. And it goes, same goes for AI on real lives. You know, like Elon Musk, like ChatGPT, for instance. You can ask anything for ChatGPT and he will answer you. Like not everything, but you know, legal content. You can ask anything on this that it will answer you. So that's my opinion. Anyways, so let's go for euro dollar analysis, and we have USD JPY going through the roof again, trying to dump some Japanese government bonds here, cheeky ones. Pound dollar, New Zealand dollar, US CAD, CAD J, Aussie yen, Aussie dollar, Aussie yen, Aussie CAD. We have a few. Let's just start with euro dollar. Okay. So if we look at here, we do have some targets that I think will probably get hit. Okay. So this one is my, let's call it favorite one, if I can say that. But one thing that I want to like show to you guys, if you go for the 1 hour chart, okay, we have been coming like from the top here. Okay, so let me grab, there's a nice tool that I can use. Oh, this one. So we were up, down, up, down, up, down, high, high, then here low, and then high, and then change of structure, and then again, and then again, and then still. Okay, so we are still on a downtrend. Okay, because it haven't breached through this low. Okay, so we still have this low to be gone. So we could go to the level of 105 down there. But besides this, I do believe if we get through this level, we can possibly come to here. Okay, that's what I think. So there's either way, there's two potential trades. Even if, you know, want to be a risky seller, I would use this as a pullback to sell around this level, or even around this level. Where is the box? There we go. Even around this level here. Okay. If we look at it on this perspective. Okay, so maybe a pullback. Where's the thing again? Here. So maybe a pullback. And then down to here. So maybe we can see something around these levels. Okay, that's what I'm expecting from euro dollar. Reasons being, France is still very like big take on Europe. Okay, because of the Brexit, fresh exit. I don't know how to call this. Brexit. That's the France executing the European Union. And from 4 days ago, there's likely no such thing as Brexit. So there, you know, it may happen, it may not happen. I don't much care about it, but it won't change anything on my life. But the news, the rumors, the things going on, still going on, will impact Europe. Okay, and that's for sure it will. And this, yes, makes sense for me because it's something tradable. All right. Then from there, we still have inflation in Europe going from the roof to the bottom. All right. So still very good inflation. Euro inflation rate. So if you look on here, last release was 2.6 from the previous of 2.4. But look at these, like it's so well done. Like on June 2023, they had 5.5. They took in 1 year and they pretty much done 50% of it. All right, so they reduced 50% of it, and they only have another, like they were so close, 0.4, now 0.6. Maybe the next one comes lower again. Okay, so in my opinion, inflation on Europe, yes, is sticky. It is very sticky, okay? Because if you look from October, 2.9 and then 2.4, and then 2.9, 2.8, 2.6, 2.4, 2.4, and now 2.6. You may have a little bit 2.8 here again, but then decline it to 2.4, 2.2, 2.1, and 2. And then they get into control, okay? Of course, the rates is still high, all right? They've cut the rates, all right? ECB rate. They still interest rates, there we go, they still very high on 4.25%. all right, so they have done the first cut here in June. All right, so from 4.5 now to 4.25 is still high, and this yet will be failing into the inflation. So consumers will be felt, you know, and all of the other kinds of stuff. So anyways, now, look at US dollar. USA still with a high inflation. Okay, much higher than Europe at 3.27 from 3.36 on the last month and 4.05 in the last year. So 3.27 is still high because the inflation dates, the target inflation is at 2. So 1.27% higher than what they're expecting. And the Fed is hawkish. All right, it's neutral to hawkish. So they are into 525 to 550. And if we look at the CME Fed Watch tool, we can see that, of course, no one is expecting cuts in the next meeting. But if we go all the way, if it loads, if you go all the way to December, they are expecting the rates to be already at 4.75. So they're expecting a cut into September or November. All right. So they are, oh, wait a minute. Yeah, they are expecting on September. So July, they're not expecting anything. And then September, they are expecting a 25 base points cut. And then November, they are expecting no cuts. And then in December, they are expecting another 25 base point cut. So this is the market. This is the overnight swap rates decisions. But look, this can change any minute. All right. Just making sure you guys know that. So that means that the Fed is not cutting. Will probably cut once or none. They still have a high inflation. Inflation is too sticky. They have a good labor market. They are very, very good at what they are doing at this moment in terms of economic sense. And then last but not least, they are a safe haven currency. Okay. Euro, still inflation heading down. They have cut 25 base points. They are a little bit dovish to neutral. They're trying to control now consumer spending, and therefore will make a weaker euro. So if those pullbacks are very good pullbacks to short it, in my opinion, all right? If you have a different analysis, I completely agree. Everyone has different analysis. This is euro dollar, in my opinion. Now, USD JPY, look, we did had a very big rally, okay, since May, all right? So very, very beginning, I remember I was on my desk when I saw this. I saw this happening. And I was like, yeah, that's another intervention. Just buy at the border and then just wait. Okay, so we are very close to the highs of the all-time highs at 160.247. Look, it will be a problem to breach this. Okay, if we breach this level, then we can expect something like this. Okay, another intervention. All right, that's my opinion. Not touching it, so not my cup of tea. Let's go pound dollar. Pound dollar, very similar to euro dollar. Okay. Look, to be honest, we don't have much time. We're running out of time. We have a few more minutes. I need to answer some questions. All of the list here, euro dollar is still my favorite trade. Gold is still a very good trade as well. I'm looking, my personal opinion on gold is that we're looking for heading down. Okay. This was a huge drop. How much was that? Like 0.25% or something? Or 2%. Wow. So 2% drop on gold. But euro dollar, I think we can catch this little up and then we can catch this big down. That's my opinions this is my analysis for today. All right. Does anyone, why is Aussie dollar looking so confused? There is a good question actually, because the market looking at Australia, RBA, look at, I'm going to ask you a question. Do you think that if the central bank don't know what they're doing, do you expect to invest money with them? Like, it's a simple question. So if the central bank don't know what are the next steps, what should anyone put money on Australia? Why? There's no answer on that, right? So Aussie dollar is pretty much the negatively correlated with the DXY. Okay, so if DXY goes up, Aussie dollar goes down. If DXY goes down, Aussie dollar goes up. And this is literally it. All right, let's put Aussie dollar here. And we can see that happening right here in my face. Okay, so where's my pen? There you go. Big move down on DXY, big move up on Aussie dollar. And then steady up, and then steady down, and then steady down, steady up, steady up, steady down, steady down, steady up. So this is pretty much exactly the same. All right. It's like it is what it is. And who taught me that was Peter Penn, CFA analyst from ACY. So yeah, what a nice song. Yeah. So that's pretty much it, guys. it was more like a chat today. I hope you guys liked it. If you want more, I can, I can come next week and bring something else on quantitative trading, and that would be very nice to chat about it. But for now, thanks to coming across, have a chat with me. If you not yet subscribe to YouTube channel, please do it so. Give us a thumbs up on this video as well, because this is going to go for the YouTube. And I catch up with everyone on Thursday. Guys, have a good weekend. Have a good week ahead, and talk to you soon. Bye bye.